If you're trying to figure out where the Southern California multifamily market is headed, there's one problem. There really isn't one market anymore. The latest data is showing increasingly different results depending on the city, the property, and even the unit type. And I think that's becoming one of the most important trends for apartment owners and investors to understand. Let's start with rents. Recent data looked at one and two bedroom asking rents across 41 Southern California cities. Only nine of those cities, or about 22%, reported year over year rent increases in both unit types. But that doesn't mean rents are falling everywhere. Here in Orange County, for example, one bedroom asking rents in Orange increased 3% from a year ago, while two bedroom rents in Irvine increased 4%. Other markets and unit types showed different results. So we're increasingly looking at a market of submarkets. And we're seeing something similar when we look at California housing values. Statewide home prices were essentially flat compared with a year ago, but underneath that headline number, individual markets and price points are moving in different directions. At the same time, the capital markets are showing some encouraging signs. Large commercial real estate transaction volume increased roughly 30% during the first half of 2026, compared with a year earlier. That's important because investors have now had several years to adjust to higher interest rates. Instead of simply waiting for rates to return to where they were several years ago, more investors appear to be finding ways to make transactions work in today's environment. So, what does all of this mean for multifamily owners? I think it means broad market averages are becoming less useful. You can't simply say Southern California rents are going up or apartment values are going down. The better questions are what's happening in your city? What's happening with your unit mix? How does your property's income compare with competing properties? And what are buyers actually paying for properties like yours? Because in a market that's becoming increasingly fragmented, property specific information matters more than ever. That's what I'll continue watching as we move through the second half of 2026.